Investors, it's the Russian Dude and welcome to another episode of Friday Communistic Capitalism. And today we're going to talk about obvious thing. Has the stock market reached its bottom? Is it the time for the stocks to reverse themselves? Is it the time for the downtrend to finally be over? Is it the time to go to the moon, simply speaking? Which stocks are going to the moon? Which one is going to continue falling? Which one is going to be trading basically sideways, not going up, not going down? We're going to be talking about all these kind of things in this short live stream. Every single time I'll be trying to make them shorter and shorter. I don't want 1 hour live streams because no one is watching them. 15, 20, maybe 30 minutes is maximum what I'm looking for. And thank you all so much for joining. I see 3 of you already watching me. I have no idea who you are, so introduce yourself in the comments. I'll personally say hi and let's build a small investing community. Let me know if Pete Griswold and Mr. Rai are here because these are my 2 most favorite investors. Okay, and so today once again we'll be answering all these questions I just mentioned at the very beginning. I'll be using my iPad to do some notes, to do some drawings, so it's more easy to comprehend, to understand information, to understand what I'm going to be talking about, and together we will make the conclusion if we already indeed reach the stock market bottom. Okay, so first things first, some technicalities. Let me once again connect my iPad so I can be drawing right away, so we're not going to lose any time, and except me connecting my iPad and putting my password million times wrong, but almost there. Okay, screen mirroring, we're almost there. Hold on a second, 10 seconds more. Okay, looks like my iPad is streaming now, so we good to go. Okay, so here we are. We're gonna be doing everything together. So, if you've been watching all my previous live streams, I've been attempting to predict that the stock market will crash approximately in February of 2022. And as you can see, I was wrong about like 1-2 weeks, because the stock market already started crashing approximately in the middle of January. I've made this 4-part mini-series about me predicting the stock market crash, and I've been summarizing all my past live streams, so if you want, after you finish watching this live stream, go ahead and watch this 4-part mini-series. It is very nice, very entertaining, very easy to watch. You might not even need to see the screen, just listen to me, just leave it somewhere in the background. There is not necessarily for you to pay attention, just when you're cooking, doing some dishes, exercising, but trust me, this is a very extremely important mini-series to understand why I was so convinced about the stock market crashing at this time where we are right now. And so, speaking briefly, basically, my biggest point, one of my biggest points was that the reason why the stock market hasn't crashed just yet, and we're speaking about December or beginning of January, it is because it was still maintained by FANG companies, which I'm gonna write right here. So we all know these companies: Facebook, which is now Meta, Amazon, Amazon, Apple, Netflix, and Google. Some people also include here Microsoft and Tesla. We might still do it as well, so to be honest, let's make it a little bit smaller so we can fit everything. So Facebook, Facebook or Meta, Amazon, Apple, Netflix, Google, and probably once again Microsoft and Tesla. But we'll be focusing on these 5 to begin with. So my biggest point was that there are so many stocks that were already in the bear market even before we all crashed. There was about 50% of entire US stock market was already in the bear zone, which means that 50% plus companies were already down more than 20% from their all-time highs. But the stock market was still relatively flat and not going down. My biggest point was that the reason why it was not going down, it is because of these companies. They are so big. Just these 5-6 companies that are inside the S&P 500, just these 5-6 companies, they represent more than 20% of entire index, entire S&P 500, which are still 500 biggest companies on the US stock exchange. And my biggest point once again was, until they crash, we will not see full-scale crash on the stock market. Until these bad boys go down, the stock market will remain relatively flat, or maybe even going up, depending on how they report. Okay, and so recently we saw the reports coming out, and not to create stuff, not to say something without justifying myself. Let's even do it together. So Facebook stock, approximately all the way since after the report. After the report, the stock went down by 26%, approximately. Of course, I'm not gonna be exactly extremely precise. I'm gonna be just using approximate numbers, but you will get the idea. So, okay, I don't need this one, so it's easier. So, Facebook was the first one, minus 26%. Okay, so obviously the report was not as devastating. So they did not meet expectations, the number of users was slowing down, so basically it was not devastating, it was definitely not the report that was supposed to crash this entire company, entire stock by 26%. Okay, so Cory Brooks saying something, I have no idea. I guess this is another kind of promoting websites or something, don't click this link by the way. And Thomas Vogelsinger, do you like Rusagro? Do you mean Fosagro? Because I'm not investing in Russian companies. My portfolio is all but one companies are American companies. The only Canadian company I have inside my portfolio is Bank of Montreal. So I cannot tell much about Russian companies. The only thing I can tell in general is that Russian companies might be very good dividend investing possibilities, because a regular average dividend yield in Russia can be easily 7, 8, maybe even double digits %. While in the US, 2-3% dividend yield is already considered to be pretty high. Some companies like AT&T in the past, they are doing all the way up to 7-8%. While in Russia, this 7-8% dividend yield is pretty normal. But okay, back to the topic of today's live stream. So Facebook was one of the first fun companies that basically was destroyed. The next one was Amazon. Amazon did pretty good, obviously, and let's see. Once again, I'm going to be using just the numbers before the report and after the report. So this was before the report and all the way like approximately 15%. Approximately 15%. So let's use the green here because it is up. Approximately what I said, 15%, yes? Yes, approximately 15%. Okay, the next one was Apple, the one which reported, and Apple stock is all the way from its report. Okay, so let's just use from these all-time lows in this month. Approximately 10% up. So Apple was also approximately 10% up. The next one was Netflix. Netflix was also one of these devastating stories that did not basically meet the expectations. Once again, the report was not that bad. The report was not awful. The growth is still there. But the thing about that, the number of subscribers, number of viewers, number of Netflix users, as well as the growth itself started to slow down. And this is the story about high growth stocks. People invest in them, they have crazy multipliers, triple-digit multipliers. And what people expect from reports of such companies is not just to surprise them, but to exceed their expectations 5-10 times. Just being surprised by the reports is not enough for such high growth companies, which is Netflix is. I'm still thinking that even though it has hundreds of billions of capitalization, it is still technically high growth stock. And that's it. As soon as people are not extremely surprised, it's not as people like shocked by the report, the stock price will go down, significantly down. And let's see, once again, I hope I have it something here. No, I don't have it, so I'll have to type that. Okay, Netflix stock, what kind of small keyboard was that? But okay, doesn't matter. Okay, Netflix stock was down, let's once again just use approximate numbers, 35-36%. Once again, I'm not going to be extremely precise in this video, it is just to show you the general idea. Okay, Netflix is down 36%. And finally, Google, which by the way announced that they're going to do the stock split 20-1. So every single person who is holding right now Google stock, for each share they're holding, they will receive additional 19 shares. And each share will be obviously 20 times cheaper. So let me see What kind of keyboard is this? I have no idea, but okay, it doesn't matter. So new Google price will be like less than $200 per share, less than 100, approximately $140 per share. Like, forgive me for my bad math, I'm in a rush right now. So, but approximately after this Google stock split, every share price will be approximately $140, assuming the price will remain the same. The price might go up and down by the time the split happens, but we're talking about just as for now. Okay, and Google, since the report, went approximately by like 10%, let's say. So, okay, yeah, like, let's make it simple, 10%. Okay. Where is my green one? Okay, Google went up by 10%. Not so good looking 10, so I have to make it better. Okay, next one is Microsoft. And the final will be Tesla. So we're almost there. We're gonna be drawing the conclusions right now, so just give me a second. Okay, Microsoft report was pretty normal, so no huge surprises or anything like this. I have no idea. Let's just take it from this number all the way until this number, 4%. So it was basically nothing changed. The price was still pretty normal. Okay, and the last one, I need some kind of table. It's so hard to write holding in my hand. As you can see, my whatever it's called. I have no idea how to speak English anymore. Okay, and the next one is Tesla. And the final one, I mean, is Tesla. Tesla my ass, like Jeremy calls it. Okay, so after the report, the share price went down by, let's say 20%. 20%. Once again, these are just estimated numbers. 20%. So, and this is what we see. So, long story short, the earnings report is extremely important part of the stock market life cycle. Stock market is extremely volatile during earnings season, and it is less volatile in between, obviously, earnings, because earnings are one of the biggest things that influence the share prices going up and down. In between earnings season, there might be some news, some mergers, acquisitions, research development, or if it's a biopharmaceutical company, there might be some announcement that the drug is passing like second, first, third stage of the clinical trials or anything like this. But earnings report season is what influences the share price, one of the biggest influence for the share price. So, and once again, since every single company, like more than 500,000 of companies of the entire stock market in the US was already in the bear zone, the only thing that were still keeping the stock market from completely falling down were these companies. And based on this, we see that basically everything that they reported if we summarize everything, yes, I know, minus 26, minus 36, minus 20, all this is higher, brings the share prices of the entire stock market lower than 15, 10, 10, and 4. But still, when we combine everything, when we combine capitalization, because let's say so, Apple stock market capitalization is way bigger than Netflix stock market capitalization. So Apple going up 10%, while Netflix going down 36%, it kind of more or less leverages out, so more or less it nets out the performance of the entire index as a whole. So because of this, for this reason, since these companies reported, some of them reported awful results, some of them reported decent results, some of them reported shocking results, like for example, Google. This was very insane, to be honest, report, and this stock split. As soon as the stock split is gonna happen, and quote me on this, once again, you can make a video clip out of what I'm gonna say right now. In my personal opinion, with very high certainty, I think that as soon as the stock split happens, this will send the Google share price up in the next couple of days after the split. So once again, this is what I strongly believe myself. Don't use this as an individual investment recommendation. This is not an investment advice. This is my just guess. I'm still thinking if I should participate in this or not, but what I want to say is that 100% I always wanted to have Google in my portfolio. Just before this, I was thinking that the company was already way too big and the growth cannot go down, cannot go up indefinitely. But still, I'm not potentially buying Google in the future for the huge growth of the company. I'm buying this just because this is what I'm using every single day. I'm a YouTuber myself, after all. Google and YouTube are number 1 and number 2 most visited websites around the world. respectively, obviously. So how can you not have Google inside your portfolio? But it was just so expensive. Almost $3,000 for one share of Google. So this was obviously out of reach for so many individual investors, me including. I can't buy one share of Google, but this means that I will spend entire monthly deposit that I'm gonna use buying different shares just on one single share of Google, which kinda I can do it, but still like it was a little bit nonsense for me. So unfortunately I had to miss out on this. And yes, I know I can buy fractional shares, and yes, my broker allows to buy fractional shares, but still I don't like to have I want to have actual pure numbers of shares of the companies that I'm holding. So long story short, these companies, they did not surprise us, they did not devastate the stock market either. So which basically means that, okay, that's it, earnings report season is still going on, but the biggest companies already reported their earnings. So long story short, from now on, unless there's like a black swan, like another virus or anything like this, or some maybe Federal Reserve is decide to increase the interest rates 10 times in a single year, in a single month or whatever. So most likely, earnings season will not influence the stock market going forward, from now on going forward. All the other companies are going to be reporting. They are smaller companies than this FANG, Microsoft plus Tesla. So these companies might go up and down 20-30%, but they will not have significant impact on the stock market. Which basically means that in my honest personal opinion, I think that the stock market at least not gonna go down significantly from this moment going forward once again. We might be relatively flat. We might go in a slow down trend because there are still companies reporting huge uncertainty, and now besides quarterly reports, there are annual reports as well. So we still might go through this. There is still interest rates supposed to be increased in the future, like up to 4, maybe even more times just this year alone. But all this is already included in the price, because the stock market is all about buy the rumors, sell the news. And everything, once again, is already included in the price. All the rumors are already included in the price. So unless, once again, bringing me back to my main point, unless black swan or something else unexpected happens, I don't see the stock market declining significantly from this moment going forward. But yet, once again, we might experience sideways for an extended period of time, maybe even a year or longer. And my strategy is not gonna change. My strategy is not gonna change. What I'm going to do is to continue buying every single month, and at the end of the first week of each month, I'm just gonna continue buying stocks. And even though the stock market, let's even see it right now once again, because I have iPad, I can do whatever I want now. So from all-time highs, the stock market was down as much as almost 10%, and now it is down 6%. Which basically means the stock market hasn't technically crashed yet. It didn't even reach technically the correction zone, because correction starts at 10%. So technically we haven't even reached the correction zone. Which basically means only one thing. I'm gonna continue buying. This is what I forgot to say. Even though the stock market declined almost 10%, some of the companies that are very interesting for me personally, like for example Unity. Maybe Unity is not the best example, because just today Unity went up by like almost 20% in a single day. But okay, whatever, let's use Unity. I cannot think about anything else at this point. Okay, Unity stock price. So Unity went down from its all-time highs. At some point it was down as much as 54%. And I do have Unity. I started buying Unity 2 months ago. So I started buying Unity, right now is what, February, January. So I started buying Unity approximately in December. So my first price that I was paying for Unity, no, it was in January. So no, it was December. Okay, it was December. January, February, yes, it was December. So first time I bought Unity, it was not that many shares. I bought like 5 shares, approximately at 150. And at this time I bought Unity with approximately 20% discount. The second time I bought more shares of Unity, because from my last purchase date, which was in the beginning of December, it went down by additional approximately 18%. So my major part of my Unity position, I bought approximately around $120. So, and my purchasing day will start once again very soon, next week. Next week I'm going to buy even more Unity, because right now, yet once again, it is down another 20%, another 13-15%. So next time one of the companies I'm going to be buying is Unity, because once again, this is down more than 50% from its all-time highs, even though the stock market is down only 6% at this moment. And that basically creates a perfect opportunity for me to pick up some great companies like Unity. Companies with very good fundamentals, as well as qualitative and quantitative fundamentals. Every single person who I know who is like a graphic designer or 3D designer, game designer, says that Unity is one of his favorite tools to create all this basically 3D work. And because we all know that metaverse is coming, we want it or not, and so I honestly think that Unity will be one of the biggest players in the sphere. And at this point, it is only $30 billion market capitalization, which creates the opportunity for this company to be potentially, let's dream like this, potentially this can be $300 billion company, which basically means this is a 10x growth. So I know I always said that I'm never gonna be the person who is making videos next 10x stock, blah blah blah, by this, by that, and I will never make videos like this, I promise. But this is just part of the live stream. So I can say it right here, because the title of the video is not next high growth stocks to buy. But this is one of my biggest convictions at this very moment, this company Unity Software. So that's basically it, I guess. Unless you have any comments, unless you have any questions, feel free to let me know in the comments. Let me put myself full screen so I can say bye. Okay, so thank you all so much for joining. Have a nice Friday and nice weekends. Buy the dip, buy stocks that you believe in, buy the stocks you're most convinced about. If you do not like buying individual stocks, buy just S&P 500 or Total Stock Market Index, VTI. But what I know for sure is that you need to invest. Investing is the thing that is the tool of rich people. You want it or not, basically this is the place where if you just keep your money in the bank account, this will be devoured by the inflation, which is up to 7% just this year alone, just this last period, let's say so. Last reported inflation, 7%. I cannot make conclusions, I cannot end the stream properly, but okay. Thanks so much for joining, see you next Friday.